Tēnā koutou katoa, tēnā koutou e aku rangatira, kia tātou e tau nei ki ora, kia tātou e tau nei ka nui tāku mihi, tēnā koutou, tēnā koutou, tēnā koutou katoa no reira, e oa mā me mutu I konei. Welcome everybody. My name, although it's probably at the bottom of your screen, is Chris Eichbaum, and I've recently joined up with the Fabians. This is a kind of online town hall meeting. Our focus is on te puta mātua, te putia mātua, the Reserve Bank of New Zealand, and a change that we're advised may well be prosecuted tomorrow, which will take the form of the removal of the dual mandate. I'm not going to say much now. We are incredibly grateful that we've got three panelists who will be doing the talking, and one of them will also be doing the kind of taking on a discussant role, and towards the end of the discussion, maybe distilling the essence of what we've talked about. And we'll invite questions, but the questions will invite you to put them through the chat facility. We'll be keeping an eye on the chat facility on the right-hand side of the screen, and we hope to have the last 15 minutes so we can actually address those questions and provide an opportunity for our panelists. Now let me introduce our panelists. So we're delighted. Nona Pelletier is RNZ's senior business journalist. Liam Dann is New Zealand Herald's business editor at large.
Got it.
And Grant Robertson is formerly the Minister of Finance, as we know, and now Labour's finance spokesperson in the Parliament. So thank you to the three of you for agreeing to come on board with this town hall. And I welcome all those who are signing up. I see amongst you old friends, new friends. I see amongst you at least one former Reserve Bank board member, Margaret. So thank you for taking the time out of your busy schedules to join in this online town hall meeting. And thank you to the first person who's just put the first question up there on the chat. Thank you. As I say, we'll probably deal with those towards the end, but our panelists have been told if you see something coming up as a question in the chat facility and you want to engage with it, go for your life. Okay, so at this point, I'm going to hand over to Nona Pelletier and Grant Robertson. Invite Grant to kick off. The brief is a fairly wide one, but kind of went to why do we have a dual mandate? How did it work out in practice? What's going on at the moment? And what does it portend in terms of the future for the Reserve Bank of New Zealand and for the conduct of monetary policy? So over to you. Thanks again.
Kia ora koutou katoa, tēnā koe Chris, ngā mihi nui kia koutou. Thanks so much for the chance to be with you this evening. Among the many things that the incoming government has decided it wants to repeal or take away or generally undermine, I'm not sure that the dual mandate of the Reserve Bank is actually at the top of the minds of many New Zealanders. And so I am very grateful to the Fabians for taking the time to put this on, because while I say that in some jest, I also think it's very representative of something quite important that is changing in terms of the new government, and something that I think we should be very, very watchful for. What I thought I'd do in this first bit is do four things: talk about what we actually did do, and so make sure we're all on the same page about what the change was that we made in our first term in government in this space. Then secondly, talk about why we did it. And then thirdly, what the impact of the change has been in bringing in the dual mandate. And then fourthly, a little bit about what happens from here, because this is not, for some of you who were here early, you heard a bit of a conversation about the fact that this particular change is not the only thing in the monetary policy space that the coalition agreements give us to think about. So hopefully that will cover off most of what comes up, and I'll also try and endeavour to pick up the questions that are being asked as well. So in terms of what happened, in April 2017, when I was the Labour Party's finance spokesperson, as I am now, before becoming minister, I announced or gave a speech and announced a policy at the Institute of Policy Studies to make a number of changes to the Reserve Bank Act. My starting premise that day, and indeed today, is to, look back to the time that the Reserve Bank Act was passed, and it was passed in December 1989. Now, at that point, I was just get David to mute himself there. There you go. Thank you. In 1989, I was just completing my 7th form year. And it is worth remembering that it's some considerable time ago. I think something called the World Wide Web had been discovered, or Tim Berners-Lee had done something in that regard. And Seinfeld was the big show on television, and Ronald Reagan was just completing his 2nd term as President of the United States. I say all of those things to point out, one, how old I feel, but two, the fact that it was a very long time ago, and an awful lot had changed in the way we think about the economy between 1989 and when we did this in 2018-19. The Reserve Bank Act had been subject to 1 or 2 changes, but had not been fully reviewed in the entire time of its existence. And so we thought that after nearly 30 years, a review would be timely. And we set out the parameters of what we wanted to do and what we wanted to achieve in that speech in 2017. On getting into government, and I'll rattle through this quickly, I'm happy to take questions if anyone's got them about this, but we got into government and announced an independent review panel to do that work. It included Suzanne Snively, who had been a former member of the board as well, along with Carol Karakoglu from Victoria University, and Malcolm Eadie from the Australian Reserve, formerly from the Australian Reserve Bank. They produced a pretty comprehensive report. It was at that point, to answer Warwick's first question, that we shifted from what had been the Labour Party policy, which had been to ask the Reserve Bank to support full employment, to moving to supporting something called maximum sustainable employment. That change was made because there was the view of the panel and many of those who submitted in our process that we needed to have a concept that could be manageable alongside the other mandate of inflation. Now, happy to come back to this because it's quite an interesting argument as to whether or not full employment per se is a possible thing. And actually, in Australia, just this last week, they've effectively committed themselves to a full employment mandate, which I'll talk about just before I finish. But essentially, we accepted the recommendation of the panel, in part, somewhat ironically, to try to get cross-party support for the changes that we ended up making. But there is, a fairly solid body of literature to help guide you through what is maximum sustainable employment and what is full employment. And Chris was on the board, and he can talk to you a little bit at some point about how the board itself worked its way through that as well, as the Reserve Bank dealt with it. It is worth noting that other changes were discussed at the same time, and we ended up splitting the Reserve Bank review into a couple of phases because it was such a big undertaking. Alongside the change to the adding employment to the inflation control mandate, which is the significant change we made, we also brought in a new decision-making structure. So the 1989 Reserve Bank Act is, in terms of monetary policy theorists, is regarded as a pretty good model for that time. It was world leading. At the time, many other reserve banks followed us. But over the course of the 30 years before we did the review, other reserve banks moved away from a number of aspects, including whether or not price stability or inflation should be the sole focus. But almost every reserve bank moved away from the idea that there should be one decision maker, that the Reserve Bank governor was the person who made the decision and they alone were responsible for it, to a more of a committee structure. The bank itself had even evolved to that point, but the legislation hadn't caught up with it. We changed that and brought in outsiders as well. So there are now 3 external people who sit on the Monetary Policy Committee that make decisions on the official cash rate, along with an observer from the Treasury. It's worth putting in square brackets for tonight's discussion. The coalition agreement between National and ACT asks for further work to be done on that last point, in addition to the mandate change, which will be discussed in Parliament next week. And in addition to that, and perhaps far more controversially, removing the phrase medium term from the period in which the Reserve Bank needs to bring inflation back to between 1% and 3%. There's a lot of reasons why you wouldn't want to do that. Prices fluctuate wildly in our economy, and if you were constantly chasing your tail to bring things down to 1% to 3% immediately, you would see sharp and very regular interest rate lifts, and I think that would destabilize the economy significantly. Now, that isn't what we're talking about tonight, and it isn't what will be in the bill that comes into the House tomorrow, but it is in the coalition agreement between National and ACT to follow through on that. We also made a significant other changes. We completely redid the way the bank looks at financial stability, including putting in a financial policy remit into the bank's process to tidy up a lot of loose ends, made a number of prudential regulations, changed the way the Reserve Bank Board operated, and then in a third piece of legislation, which we only recently got through, we passed the Deposit Takers Act, which, among, again, many other things, creates New Zealand's first deposit insurance scheme, or deposit guarantee scheme, which has been much needed for many, many decades. So it was a big program of work that we did in monetary policy reform. If I can summarize why we did it to modernize it, to bring it into line with best practice internationally. But most significantly, and this brings me to my second point, we did it because it was the right thing to do. We and I firmly believe that making sure that you keep inflation down is essential. Liam and I are of a similar age, and we both have written in the past about growing up in a period of time of both extremely high inflation and extremely high unemployment. Both of them are terrible for people's well-being. High inflation particularly impacts and affects low-income people, partly because of the way the spending profile of what low-income people tend to spend the majority of their income. But unemployment is, to my mind, one of the greatest scourges on people's ability to achieve their potential and to promote their well-being. And as a result of that, it was my view that if we believed, and the Labour Party clearly does, one of our historic missions is to ensure that people have jobs and good paying jobs, that we get all parts of the economic apparatus to be working towards that end. Now, we acknowledge that the Reserve Bank's toolkit wasn't necessarily best placed to be the lead agency on making sure that New Zealanders were in work, but we certainly thought that it could be part of their mandate to do that. And so what we settled on was maintaining price stability, the 1% to 3% inflation range, and we gave that a very active piece of language. So in the Act, it's achieving and maintaining the stability in prices. And then we said supporting maximum sustainable employment. So we were recognizing in doing that, that the official cash rate, the main tool available to the bank, is a very direct tool when it comes to price stability and a slightly less direct tool when it comes to employment. But putting the two together in the Reserve Bank's purview meant that they were focusing on really the real economy in all its aspects. And without that, I feel like New Zealanders will be worse off. In doing so, we realised that we needed to change the purposes of the Reserve Bank Act as well as the objectives. So the purpose clause of the Reserve Bank Act now says that its purpose is to promote the prosperity and well-being of New Zealanders and contribute to a sustainable and productive economy. And again, for me, this sets up the place of the central bank within a broader economic framework. It's not acting outside of that framework. It has a very important set of jobs to do, but giving it that purpose clause for us was a very significant change as well. So we changed the purpose, we added the objective, and I think we set up a fairly coherent system for the Reserve Bank to work within. It should be noted at this point that this is not something I dreamed up. The US Federal Reserve has a dual mandate, and since Chris, I think, has just noted that he's not talking, I'm going to steal a line out of his excellent newsroom article that you should all read on this topic, where he quotes Mary Daly, who was a member of the Federal Reserve Board, and She captures the relationship as two mandates and one goal. And I'll read the quote out because it's absolutely spot on. The enduring lesson of my childhood is that people need both jobs and stable prices. That is why the dual mandate is not a choice between two desirable things. It is a balance meant to deliver on a singular goal, a sustainable and expanding economy that works for everyone. That's it. In a sentence, is exactly what we were trying to do. And as a child of the Rogernomics era in the 80s, I saw what unemployment did to the community I grew up in South Dunedin. It devastated the community I grew up in and left people and families vulnerable, the scars of which we still bear today. Inflation is a scourge as well, but unemployment is most definitely one that should be considered alongside it. Briefly on the last 2 points, what's the impact been? Well, actually, the governor of the Reserve Bank has been clear that he has not had to have an unacceptable trade-off between the two. There will come a time where you will be faced as a Reserve Bank Monetary Policy Committee with trying to work out one thing or the other, but actually in the period that we've had, he's felt that he hasn't been affected in his, or the committee hasn't been affected in their chasing down of inflation because they also had the employment target. The effect has actually been that we're having more conversations about employment and unemployment and why they matter and the interaction of the labour market with monetary policy. But it is that balance that we're looking for. The thing I really want to hammer home is that I believe one of the reasons we've got through COVID the way we have and the way we've got through the recent cost of living crisis the way we have is because people have been in jobs. And I can tell you that if we had had unemployment at a higher level than we do now, the number of people who would have lost their homes as interest rates rose would have been significant. And that ability for people to have been in work in the historically low levels of unemployment that we've had, to me, is one of the reasons why we've done well. And it was not by accident, it was by design through many things and many policies that we undertook. But this one is actually part of that picture. And then finally, in my bit now, and as I say, I'm very happy to take questions, what happens from here? This will a bill to get rid of the objectives. We don't think they're going to get rid of the purpose clause, but they might, who knows? But if they do get rid of the objectives, a bill to do that will probably pass under urgency this week without reference to a select committee. I think that is wrong. I think that on something as significant as this, it should be going to a select committee. When we brought the changes in, we did a full public review process and a full select committee process. So it's why it took the best part of 18 months to actually get it through because we recognise the significance of the change. I don't buy that going back is somehow or other a less significant move than going the way that we did. So I'm deeply disappointed that the government will put the line through this potentially by the middle of the week. We then are faced with, as I said at the beginning, the two extra bits that the ACT Party looked at, which I understand, and Liam might have a bit more to say about this. I understand the government is going to be taking some advice on. To me, it sits very squarely into, here's my political moment for the very political moment for the evening. It fits into a broader program of taking New Zealand backwards, in this case backwards to 1989, and an awful lot has happened since then that I think we need to capture in our policy making, which unfortunately this doesn't. So I'll leave it at that, and I'm happy to pick up any questions now or later.
Okay, kia ora, Grant. For those of our questions, please use the chat facility at the bottom of the screen if your screen is the same as mine. At this stage, though, I want to pass over to Nona Pelletier, who I introduced earlier as RNZ's senior business journalist. Nona's agreed to be a sort of discussant, if you like, but also to add her own views, questions, comments. She's, I think, probably got her finger on the pulse of the business community in particular. So, Nona, over to you.
Thank you very much. And thank you, Grant Robertson, for that discussion and contribution. I'm just wondering, though, when you talked about what the Reserve Bank might or might not do if it didn't have the dual mandate, most recently, the governor of the Reserve Bank said that with or without it, the discussion about employment and the labor market is always part of the discussions when monetary policy is discussed. Were you not confident of that? Is that why you brought in the maximum sustainable employment clause?
Yeah, look, I mean, I've heard those comments made as well, and both more recently and in the past when we brought this in. Look, I think anyone, and there are many people on the call who've got much longer involvements in the public sector than I do, would tell you that if something's in an objective clause of a piece of legislation, it's going to get way more attention. And I think I didn't really want to leave it to chance, but more than anything else, we were trying to send a very strong signal that we wanted the whole apparatus of government supporting employment as close as we can get to full employment. And so it was really a matter of saying, well, if we believe it's that important, we should put it there. Similarly, the Reserve Bank governor, who by the way I have a great deal of respect for, he also said that about house prices as well. And we ended up in a slightly differing opinion there, because it's all very well to say something's in the discussion, but if you're actually compelled to give reference to it in your work, I think it elevates it to a place you really, you get best value from. And one thing I'll give great credit to, I mean, not a lot of people probably have seen it, but there's been more, some of the writing that's taken place by the Reserve Bank, by the Treasury, by MB on employment and maximum sustainable employment is a really important contribution that I don't believe we would have got had we not put it into law.
And having said that, the fact that you did, and now it's going to go according to what we can expect later. In any case, that it's going to go, but it has been raised and elevated in the idea of the Reserve Bank and the Monetary Policy Committee and so on. Are you confident, or are you concerned that it will just be ignored now?
This is great. I feel like I'm on checkpoint. Look, my view is that I know that the bank will. I mean, I do, as I say, I respect Adrian, and I do believe that the bank will continue. Obviously, they'll think about it because it's one of the measures of what's happening in the economy. However, I think it does take us backwards. It takes us back to a time where there was a very pure view of what it is that represents, if I can boil it down to a term, success in the economy. And as I said before, keeping inflation low is most definitely a partial measure of success, but it is only a partial measure. And I guess that's what worries me, is that the kind of society we want to live in is one that values a range of different success measures. And you'll recall that I was doing all of this at the same time as doing the wellbeing budget and trying to get measures beyond GDP and so on. For me, it's in that vein that I feel there's a loss here of an opportunity as much as anything else. And I mentioned it briefly, Nona, when I was talking, the Reserve Bank of Australia have just altered their agreement between the governor and the government to actually talk about full employment. And listening to my good friend and colleague Jim Chalmers, who's the Australian Treasurer, it's for that exact reason that we've learned the issues that occur with unemployment socially, and the Reserve Bank's got a role to play, albeit perhaps not at the level of price stability, but there's a real baby in bathwater situation going on here, I think.
So just one other point, maximum sustainable employment is not well understood, nor does it have a measurable output. So in the ideal world, we know that we manage what we measure. If you can't manage maximum sustainable employment, one would ask, what value did it actually have in terms of what the Reserve Bank was supposed to be supportive of in the first place?
Yeah, and look, we grappled around with this. As I said at the start, my initial the policy the party put up in 2017 and that I spoke about when we announced it was full employment. But even then, we couldn't agree on what full employment was either, for that matter. So we went for something that, as I say, had a practical application and had some central banking history, because it had been the term used internationally. It's used by, just reading an article last night, actually, by the Governor of the Bank of Canada, going into great depth about what it is. I guess what it is, and this is probably the difficult bit of the conversation, is it's representative of that balance, which of course is that if inflation is out of control, what a central bank tries to do is slow the economy down or take heat out of the economy. That in turn can have the effect of increasing unemployment. Ultimately, what we're trying to do here is find the best balance, find the way in which we can do that, bring inflation down without exacting massive societal damage by lots of people losing their jobs. And so it is an exercise in balance. And so the term maximum sustainable employment acknowledges the other role that the central bank has and gives you that balance. The fact that it doesn't have a very, very specific definition, I'm not too worried about. To be honest, if it was a specific percentage, we'd end up targeting that rather than a lower percentage, which we might be able to do. Everyone told us, I remember studying and being told maximum, full employment would see 4% of people unemployed. We've had quite sustained periods with less than 4% of people unemployed. So I'm not so worried about it not having a very specific target, but actually the Reserve Bank and the monetary policy statements list about 4 or 5 different measures that they use. So we are managing what we measure. It's just there's more than one measure.
All right. Thank you very much, Grant. And I think we probably would like to hear from Liam now, but I'll pass back to Chris.
Thanks, Nona. And thank you, Grant. Liam, over to you. Liam, you've put pen to paper in what I thought was an excellent piece coming out of the Herald. You've obviously been reflecting on the likelihood of a change and possibly the implications of it. So over to you.
Sure, thanks. Can you hear me okay there? Great. Yeah, well, thank you, and thanks, Nona and Grant. I mean, yeah, I probably won't get into as much detail because Grant knows it inside out, and but I did think it'd be interesting to sort of step back and look at the core of this argument and where it's coming from, and maybe I can say some things that would get Grant into trouble. I don't know. I can say things on News Talk ZB, and it all seems to go into the ether and not cause too much trouble. But as he mentioned, we are of a very similar age. I think exactly the same age. His birthday's the day after mine, so I'm 1 year older than Grant, which means that we really did come through in that era that came out, literally coming out of university into a job market where while we were beating inflation, we pushed unemployment up to around double digits, 10%. Maori unemployment went up above 20%. There was a huge amount of social dislocation. Obviously, you guys know that, which in my view, we still, we have generational issues coming out of it. I try to stay fairly agnostic politically, believe it or not, but I have written about this hardline monetarism being a bad idea, in my view. And I think Grant touched on that idea of balance, and that, what he brought through and what Labour's brought through, what we've had in this country since '89 is almost a bilateral sense of understanding that we believe in monetary policy and that monetarism works. We had 20 years of inflation almost, and I think a lot of New Zealanders were really scarred by that. That became public enemy number one over a long period, much longer than we've just been through. And of course, it's at points in time, the government, Muldoon, for example, tried to control it with price freezes and wage freezes, and it just got worse and worse. So what we achieved with the Act in '89 and then the targeting through the early '90s in getting inflation under control, it was sort of seen as heroic, and a legend grew up around it. And I think, it's great. New Zealand was celebrated in monetary policy circles. That has had a huge cultural impact, not widely, as Grant says. It's not like everybody has got monetary policy top of mind, but we are a nation of quite a hawkish nation when it comes to inflation and monetary policy. People have a lot of views and ideas about it, and there is, quite frankly, a really a strong streak of really strict old school monetarism running through the economics community, particularly some of the academic economists and some of the institutes. And I actually pulled it out just to remind us. Milton Friedman famously said, inflation is always and everywhere a monetary phenomenon, in the sense that it is and can be produced only by a more rapid increase in the quantity of money than an output. So, I would actually question some people. Well, a large chunk of the economic community doesn't really see that balance quite the same. They are absolutely hardline about the idea that inflation has to be controlled before you can do anything else. And I think, I believe that some of that is a symptom of the 1970s and the cultural environment or the economic environment and the transition we went through. And I've pushed back against that for the past few years because I've felt that it isn't the 1970s and that we actually do have this mechanism in place. The dual mandate, whether it's a dual mandate or a single mandate, it is still monetary policy, and that's where you've heard Adrian Orr talk about being pretty relaxed. He's kind of comes across a bit agnostic either way, because he says he considers all things. He'll consider unemployment, but he has been happy to pull the levers hard in both directions. So he's a monetarist, but he will use that monetary supply, the mechanism quite hard in both directions, and he was prepared to use it through COVID, and he did it quite knowingly. He knew he was taking a risk on doing too much because he believed that the risk of not doing enough was worse. They were very open and forward about that. And some of the economics community, ex-Reserve Bank people here really, really hated it. Wrote very strong things. We even had Graham Wheeler, who I really respect and who is a really mild-mannered, sort of governor himself, but he even came out, against it, and that was quite unusual. I think Arthur Grimes accused Adrian of effectively driving full speed at the lights and in the hope that he'd be able to slam on the brakes just in time. And I thought, well, yeah, what if he can do it? That's pretty good if he can actually do it. But anyway, so that's where we end up. And I think, so we're, as Grant's mentioned, we've seen a whole bunch of policies, outside of probably National Party's core policy, which is that they want to tighten up a bit fiscally and whatnot, that seem to be taking New Zealand backwards quite deliberately. Some of the performative stuff about Maori language and all that sort of stuff. And so you've got that on one hand from New Zealand First culturally, and then ACT very much grounded in that idea that, inflation targeting is important above and beyond all else. And that's where you get to that bit that actually worried me more in that column, because about the medium term. And I'd just say that, if the law changes tomorrow and the mandate goes back to a single mandate, I think we'll be okay in the short term, because we do have a governor that will take a balanced approach, and we probably have been well served, back the last decade or so in that sense. But you don't know what happens next, who gets appointed next, and how much that could end up coming down to the character of one person, and that's, I guess, the reason why we build these things into law. But so that's why the one that really worried me was removing that medium term outlook, which would effectively mean that if you had an external shock and the country was facing a massive sort of cost blowout, something that was going to push prices high, they would just have to react without any sort of hesitation, and effectively, to the point of, causing high unemployment, flattening the economy. And I noted that there's been, I think there's actually been about 12 changes to the policy targets agreements over the years since 1990. So they do happen quite regularly, but they've always had something in there about the bank being open to having some leeway to around that target when there is an external shock. And going back in time, the fears were much greater about something like foot and mouth. Which I suppose these things could still happen, but we've since discovered that we've got pandemics and earthquakes and all sorts of external shocks that can come along. So you'd hope that they that sort of time to allow some room to adjust to monetary policy you'd hope that that would stay in there in some form, because otherwise, you know, the social fallout would be quite blunt. And again, Grant touched on it, but, you know, I've written that, you know, we all feel the pain of inflation. It is true that it soaks up, it lands heavily on people who spend all their money on living, and so it does hurt the poor hard. But if people still have jobs, and if we've got this monetary policy in place and we trust it, then it's going to be a relatively temporary phenomenon. And if you have a job right through it, you'll find a way. So we get this situation where, in fact, mortgagee sales, you know, business liquidations, credit arrears are actually at historically low to normal levels. They are rising. We know the economy is slowing as part of this process, but you'll see stories with headlines saying that it's you know, up 20% since last year or whatever. That's coming off record lows, and in most of those things I've just mentioned, we're sort of only just coming back to 2018 levels. So in that sense, the economy has got through quite well. It's almost a bit of a mystery to me why wealthy people who have enough buffer in their savings, you know, why they hate inflation so much. They really do. And there's been a real sort of, I guess, you know, it works at two levels, because, you know, obviously ordinary working people don't like prices going up, but when they're being fed one side of the argument from people who seem to have an ideological dislike of it, it really fuels something. And I think it has been quite it's been caught up in the whole, you know, it's almost as if it's part of this culture wars type thing. So I hope, you know, we're well served on this with the governor we've got. I think I was, I don't know, this is fairly candid, isn't it? I think I was the guy who told Christopher Luxon that he was probably going to get Adrian Orr for another term, because he didn't know that there was a 5-year appointment and whatnot when we caught up for a coffee. But but look, on that, Adrian will probably get on fine with Luxon. He's a you know, Adrian's worked in banks. He does believe in monetary policy. He believes in targeting inflation. And I don't think Christopher Luxon's going to want to go there on telling him not to speak Maori. So I think, you know, I don't think they'll take that to the brink. And I think, you know, that means that hopefully we don't have a situation where this matters as crucially in the short term, but longer term, that's where you potentially have issues arise. Just trying to think if there's anything else that I wanted to cover.
Don't worry, I'll give you a chance
to throw some questions at me, Nona.
Well, thank you very much, Liam, for your contribution. It's very interesting. I'm just wondering, with the confidence that you have in the Reserve Bank governor, do you expect that the disappearance of the dual mandate will make any difference to the way that the Reserve Bank approaches maximum sustainable employment, or gives rise to the issues around that?
Well, yeah, I don't think it will, because I think Adrian does take a fairly holistic approach. You know, he sees that damage. I mean, he's obviously, it's not politically stupid. He wants to get rid of inflation. We all do. He's really emphasizing that at the moment, and there's some good reasons why they would do that anyway at the bank, in terms of, you know, like not. They came across very hawkish in their last, monetary policy statement. That's probably politically quite good, but I don't think, I'm not saying it's cynical, because I think, you know, we can see that there's reasons why. I don't believe that they'll hold rates up for as long as they say they're going to, but they couldn't take a backward step, or the markets were going to, you know, keep dropping them. We'd have seen mortgage rates come off too soon. So that's all part of the game, I guess. And yeah, I honestly think, you know, they're not going to stop Adrian starting off using Maori language either. I mean, he would do what he wants to do, but I don't think in the scheme of all the fights that Luxon and Willis are going to be taking on, that they want to take on that one right now around, you know, there are people who have called for Adrian to resign because of the Maori and because of dealing with climate change, which, you know, as if he should be in a room only thinking about this one decision for, you know, every minute of the day. And that he's even been told off for taking holidays, you know, or having a long break between now and February before they make their next decision. So there are some very, there are some people who are strangely passionate about this, in my view.
Strangely passionate. What about you? Are you passionate about it, or did you just write about it because you thought it was of interest? Because it's not clear to me whether or not you're for or against.
Well, I am passionate about the idea that we take unemployment seriously. So I think, you know, as I say, I possibly, you know, we've had all those years of a single mandate, and it was mostly handled quite well. I mean, Don Brash is Don Brash, so you could, you know, that was where it was the most hard-nosed. He was celebrated because, you know, everyone hated inflation so much at that point. And I do believe we underplay how much damage we did to the economy in those early 90s years with unemployment. And there is a risk that we do it again. And some of the bank economists will even hint at this. I mean, we've got a spread of bank economists, but I think BNZ and Kiwi Bank are both very are starting to express concern about the Reserve Bank being too hawkish. Some of the others are still taking that one more hike, you know. But you know, I think it one of the things that, you know, that idea of having a line in there, which I think all the central banks around the world usually do, that the central bank should also step back, look at the well-being, you know, the economic stability and the general benefit to, you know, of what they're doing to New Zealand and the economy. There has to be a bit of broader context. And I just think, you know, I could get into where I think inflation's going. I mean, I actually, there is a lot of reasons why we could be back into deflationary territory again in coming years, demographic and technology and all that sort of stuff. So we really, I don't think are going back to the 1970s on this, but I think there was a sense of panic from a bunch of people who remember the 1970s and 80s, and just almost like triggered is a funny word to use, but you know, there's that. But yeah, there is a trade-off. I mean, you know, good old Bill Phillips and his curve. It has broken down a bit. It broke down a bit during those deflationary years. I also note that during those years when we were talking about deflation and there was almost no inflation, the public did not stop complaining about prices going up. And I still wrote a lot of stories about the price of cheese being too high. And there's a note from the Reserve Bank today, actually, which made my colleagues laugh because it had full of massively complicated equations to come to the conclusion that people notice inflation more when it's high and they don't notice it when it's low. But
okay, well, thank you very much, Liam, for that response. We do have some questions coming in. One of them, for example, is that whether or not there should be some recourse to a select committee before there is a change to what the Reserve Bank's mandate is. And I'm wondering, Grant, maybe if you have something to say there.
Yeah, like as I said, I do think this is one of the, I mean, Chris has used the phrase, I think, sort of constitutional elements. You know, the central bank plays such an important role. It is operationally independent, and we were at pains to protect that in what we did when we made our changes. It is the job of the government to make the law, to set the high level expectations, but then we do leave it to the bank to go off and do its thing. So as a result, there's not all that many opportunities to kind of democratically debate in a way how the bank does its job. And so I mean, look, the people will be able to find plenty of examples of bills that I didn't send off to select committee for a variety of reasons, a lot of them to do with COVID during my time in government. But I think on something like this, we are, as Chris's phrase in the question is, sort of dangerously or close to being a constitutional outrage. I'm absolutely convinced the constitutional lawyers will say that because they do a lot. But I also think that there is some substance. While we're on it, Nona, the other, I think it was Warwick's other question about, which I should have mentioned, was when we did put this through in the first term of our government, it was as part of our coalition agreement with New Zealand First. So there was, in fact, within our coalition agreement with New Zealand First, a commitment to modernise monetary policy, of which this particular element was the first one. It certainly represents yet another evolution of the thinking of the Right Honourable Winston Peters, of which some around the mosaic have seen many circles of. So no doubt I'll find an opportunity to remind them of
I'm
that
sure you will.
course
Now, we've got a lot of questions coming through, but not all of them are on topic. So I just wanted to ask one that is. And I think both to Liam and to Grant, one of the things I heard that really stuck with me was the idea of him putting this in as a dual mandate. Really, Grant, you being a follower of fashion, maybe not you specifically because Winston had a hand in that, but generally speaking, putting this in, which has no, exact measurement, not a monetary policy one in any case. Was it just being a follower of fashion? Were you just following along?
No, not at all. As I said at the beginning, for me, it very much fitted with a discussion about what is the place of monetary policy in the broader well-being of New Zealanders. And Liam alluded to this before, and it is interesting the impact your childhood has. I remember talking to my grandfather about, growing up in the Depression and just the stunning impact that had on how he viewed the world, and, the great wastage of his grandchildren and not eating every scrap of food that came anywhere near them and such things, which clearly didn't do me any harm. But, that influence on upbringing, I think the thing that I think of, and one of the driving reasons why I got into politics, was actually because of what I saw with unemployment, which, as Liam has indicated, had at its heart, not at its heart, but sort of part of it was a slavish devotion to a monetarist view of the world. And I just don't think that's how we best enhance the well-being of our people. I think there's a balance that can be struck here, and that's what we were trying to do. The US, as you know well, the Federal Reserve has had the dual mandate for some time. The Australians have got a version of it, and I did mention it before that they've had it for a long time, but they've rejigged the words to talk about sustained full employment, which they then, you'll love this note of your question, they then say, so they define sustained full employment as the current maximum level of employment is consistent with low and stable inflation. So then they don't define it. But welcome to monetary policy, where it's, no one ever quite says anything as directly as that. But no, definitely not. And if I can just jump in to respond to one of the things that Liam said, I think Liam makes a valid point about Adrian. I think that as the governor and the Reserve Bank and the Monetary Policy Committee he leads, and bear in mind the external members of that committee stay. So, Bob Buckle, Peter Harris and Carolyn Saunders, who we appointed to that, carry on. So I agree. Unemployment will still get a look in. But what happens when the next person comes along? And surely we don't make public policy in the persona of an individual. We make public policy because we make it in the best interests of society over the long term. And gosh, you have to do that with monetary policy because it's all about the long term. So no, not a fashion, not a fad, something that I personally feel very strongly about, but also I think it's important for our overall well-being.
And Liam, what do you think? Fashion?
Well, I don't think it's necessarily, it depends how you frame that word. I mean, I'm not hugely slavish to fashion, but if I didn't update my suits every decade, there's fit for purpose, isn't there? I mean, at some point, and we're talking about, some changes that were made after, there's been tweaks all the way through, but after 30 years, it's not unreasonable to look. And this is where I'm sort of, I guess, myself and some others like Bernard Hickey and Shamabeel Jacob, have sort of tried to make the case that it is the inflation, the things that create inflation and all those things are not necessarily the same, that so much history is gone under the bridge. And there is a view from some people out there that this is sort of like hard science, and that it's just some sort of immutable fact that supply side economics is the basis of everything. I'm just not quite convinced. I think there's a supply and demand. There's two sides to any equation. So, I think Grant's touched on it. It's that idea of balance. And, if you don't have it in the mandate, then you're trusting, as Grant says, the Reserve Bank governor and that committee and board to apply balance. But, then you are you're vulnerable to different personalities, different characters, and so on.
Well, thank you very much, Liam. And Chris, I think I'd like to direct the last piece to you. What I hear from both Grant and from Liam is that they both have confidence that the idea of maximum sustainable employment will continue to be an important element of monetary policy for at least the term that this Reserve Bank governor serves. And my thought would be that if that goes well, then there would be no reason why that wouldn't continue into the future. Chris, what's your view?
Well, briefly, firstly, and thank you to the panel for your contributions. I think this has been great. The question really is, what next? I feel a little bit frustrated with the news from Grant that this legislation is going to be passed through all its stages under urgency. And part of me, and I defer to others who I see in front of me now, including my great friend, Professor Margaret Wilson, in terms of just, whether or not this is fundamentally, because it goes to issues of public power, and we have a constitution that, isn't codified into a single document, but does include lots and lots of different statutes. I'd put the Reserve Bank, I guess, in that bundle of statutes, which is about the constitution. So that worries me quite deeply, a change of this kind being made without recourse. I think the issues have been covered really well by the panel. A couple of points that I would add. I mean, it's generally accepted by, central bankers and those who watch them that there is no long-run trade-off that we can get between inflation and unemployment. The Bill Phillips curve. But as a former governor of the Reserve Bank said, important things happen over the transition. And the transition is now. And so you need a central bank with one eye on that transition. You need a central bank with one eye on the kind of purpose statement that Grant Robertson put into our legislation. And I'm confident that we have that in the Reserve Bank of Australia, so that inflation may well be under control. But there is that shock that Liam alluded to. And the bank then can say, okay, inflation is under control, but we have a wider brief, so we're going to intervene to use the tool that we do have to moderate, mitigate, manage the potential downside effects of that shock when it comes to the real economy. So those are the kinds of things that worry me as a former board member of the Reserve Bank, having served under a couple of different governors. Lots of folk would agree, though, that it does come down to the personality of the person who is the governor, for good or ill. And I would, accept the view that's been expressed both by Liam and by Grant that the OR approach to monetary policy will not be one that excludes labour market consideration when it comes to those monetary policy decisions, assuming that we continue to have a monetary policy committee when it comes to those decisions. I'm just looking to the side in terms of the comments that have come in, and I just really want to give our panel, just before we close off, because we're getting close to 8 o'clock. If there are any other comments that any members of the panel would like to make, given some of what you can see coming in on the right-hand side of the screen there. Well, let's go to Grant first.
Yeah, sure.
Yeah, Chris, look, I've made a couple. I've typed in a couple of responses to questions that people have put there.
Right.
I think probably overall, just to at 2 minutes to 8, drop a sort of bomb into the middle of all of this, is that there is a conversation to be had about the future of monetary policy in the big picture. And that is when we agreed to bite off what we could and deal with what we could in the time we were there. But yeah, I do think, the tools we give our central banks, and we effectively in monetary policy give a single tool, the official cash rate, to the bank, is the old adage that, to a hammer, every problem looks like a nail. And that is the risk, I think. So I think there's a much bigger conversation, which is alluded to in some of the comments, around where does monetary policy sit. I've already said tonight kind of where I think it fits in the balance of that equation. But I respect the fact that, even how we measure inflation is, the basket of goods doesn't really work much anymore. I don't buy many of my clothes in a store. I buy them online. Are we really measuring inflation properly when our consumer habits are so different to what they were? We describe things as non-tradables in the building sector, when in actual fact about 80 or 90% of the products are in fact imported. So actually we're not even defining things the way they really are in the economy. So there's another conversation for a much longer Fabian's meeting about the whole way we look at monetary policy, and that's implicit in some of the comments people have made.
Thanks, Grant. Liam.
Yeah, I would agree. I mean, and I've written about the demographics and what's happening, because monetary policy is actually, the power of it is weakening because of an older population who is not so reliant on debt. You put a lot more onus on a smaller group of people who are at a very vulnerable stage. So there's those conversations. I just finished by saying, first of all, we're talking about heading back to 5.5% unemployment, and talking about that as being, well, it's a soft landing because we've been up to double digits before, or 7 or 8 after the GFC. I think people feel what's in front of them, and those historic statistics don't mean much when you're in it, and it's the direction of travel. And we saw that with inflation that we're just going through. And I think 5% or 5.5% unemployment is going to feel really, really tough. And the transition, as people are losing jobs over the next few months, is going to feel very, very tough. And I think that's maybe going to bring this home to people a little bit. And finally, just to say, I think, look, when it comes to the policy that Grant put in place there, and I feel the same way, much the same way about Labour's immigration policy. There was some really good policy that came in and just got hammered by COVID. Just really bad timing. Think of something like immigration; it couldn't have been more thrown up in the air. And so it's a real shame in a way that's an opportunity lost because of what's happened. And obviously there have been people who have seen an opportunity there to take advantage of that to some extent, and that's politics, I guess.
Thanks, Ian. Nona, last comment from you.
Thanks, Chris, and the panel. I've spent a bit of time reading up on the subject, and I did wonder why we did go with the maximum sustainable employment measure rather than what one of the first questions was about full employment. And I read a lot about what the US Federal Reserve was doing, Canada, the UK, also the EU. But it struck me that in those jurisdictions, they're big. They've got multi-layers of government. And so I'd say that those central bankers have a much more important role in guiding the discussion on what is employment and sustainable employment and what are the best practices, and to guide in that way and to be supportive of it. But I wonder whether in a country this size, and with the structure of government that we have, with the fiscal policies in place, that those things would just happen anyway.
Any quick comments before we close that up?
I think you're doing me out of a job, Nona.
All right. Let me firstly thank the panelists for your contributions, and Nona for your being the glue that kept it all together and the river that kept things flowing. Much, much appreciated. To those who have joined us from afar, and I see many old friends there, it's lovely to see you. Even from afar, without talking, I feel and enjoy your your collegiality and bringing your intellect to these issues. The nice thing about this discussion is we didn't get down into the weeds too much. It is possible to have a conversation about monetary policy that talks about it in an accessible, meaningful way. It's just a bit unfortunate in having the conversation we're going to be thwarted in terms of what we might do next. And I personally feel incredibly frustrated that I won't be able to put up something to a group of MPs that says, well, here are some of the arguments around why modernising a central bank by giving it a dual mandate and making monetary policy in a collegial way is a good thing. And I'm also reminded by a comment that the late David Longy made. David said at one stage that if he had his time over again, he wouldn't waste it on being a politician. He'd go to where the power really resided. He'd be governor of the central bank. So an interesting comment indeed. Can I thank you all again for joining this? Can I thank my Fabian colleagues for doing all the work behind the scenes and setting up the platform? Can I wish you well? And no doubt in the course of, as we proceed, we shall be seeing each other again, whether it's in a committee room or whether it's in other places. We shall continue on. Thank you. Be safe. Ka kite anō. And please keep your eye on the next Fabian event. Thank you.
Thank you.